As of early November 2024, the SP 500 and the NASDAQ are grappling with mixed market signals, where strong performance in AI and tech-related stocks like Nvidia has been a major driving force this year, pushing both indexes high. However, a recent pullback reflects investor caution due to high valuations and broader economic uncertainties, including concerns over interest rate paths. Analysts suggest a potential short-term correction for the SP 500 as the market's valuation is stretched, with some sectors like energy facing volatility due to fluctuating oil prices and geopolitical factors. Okay, folks, welcome back to another update on the US markets, the SP 500 and the NASDAQ. Before we go any further, make sure you hit that like and subscribe button to support the channel. Any such support would be appreciated. So here we've got the SP 500 on the monthly, the weekly and the daily trends. First we look at the trends, and the CCI 150 is above its moving averages, giving us a bullish signal, and obviously the price is still well above its respective moving averages on the monthly price chart. Now if I zoom in, a couple of things to notice is we've got a bearish divergence here, lower highs on the CCI versus higher highs on the price, and that's a bearish divergence. And if it started to pull back from here, and there's no sign of that yet, you can see it's a nice big bullish candle this month so far. If it started pulling back, we'd draw a Fibonacci retracement back to this previous low. And let me just draw wait. There you go. And that'll be the initial pullback target area in that range between the 23 and the 38% level. I'm not going to draw that yet because I'd like to see this starting to pull back before I started drawing it. Now the reason I say it's not probably due for a pullback yet, if we zoom out a bit, we're going to do a Fibonacci extension, and generally you draw it in a 3-pattern move between that recent low to that high to that period there. And if I zoom in, I'll bring that and mark. I'll bring that low to that level there, and that gives us a Fibonacci extension. Now you can see it's already broken above the 78%, and it's not quite as high as the 100% level. So that'll be our potential reversal point, assuming it keeps rising from where it is at the moment. So that's on the monthly. Again, there's no guarantee it's going to hit that target, but that's just an estimate at the moment. On the weekly, we did have a bearish divergence here. You can see there's a lower highs on the CCI versus higher highs on the price, and that was our initial target range. And if we draw a Fibonacci retracement to that level, that's at 38% Fibonacci retracement. You can see they'd hit it and then it bounced. So that was now completed, that divergence. Then we've got another divergence between that high and that lower high on the CCI versus higher highs on the price. And what we do is, assuming it pulls back from where it is, which I'm not expecting yet, the CCI is broken into the neutral positioning, and that's a bullish candle this week so far. But assuming it pulls back from where it is at the moment, pull it back to that level, you can see there'd be a 38% target range there, but I'm not going to draw that yet until we start seeing that retrace. That's the weekly. So bearish on the weekly, bearish divergence I should say, even though the price is still in a bullish move. The CCI notice is still in intermediate or neutral. On the daily, we previously drew this divergence, this bearish divergence on the daily, and we drew this target range. Now because that's dropped off, it hasn't actually reached the target, and that CCI is still dropping. You can see there that low is still lower than that point. So we're going to extend that Fibonacci to that point there, and I'll extend that there as well. Likewise, we'll move this target range to that 38% level there. So assuming it pulls back from where it is at the moment, and again I'm not expecting it to, but that's a resistance up there at 59.35. It may well break through that in the coming hours and days. Now if we go to the intraday chart, we only take long trades on the intraday based on the daily, but just be careful at the moment. You'll notice on the 1 hour we've also got a bearish divergence versus higher highs on the price. It's hit that resistance, and we may start seeing it pull back from where it is at the moment. Now this is a different divergence to the daily, so but we're still assuming it pulls back from where it is now. We still draw a Fibonacci retrace to that significant low, and that'll be our target range. So I'll draw that one and keep it there. So that's our initial target should it fall back from where it is. Of course it can go higher, but it may well drop. Now one thing to notice is when I go back, if I go back to the monthly, weekly and daily, assuming this on the daily or hourly start pulling back, it may actually bounce off the 1 hour and keep rising, in which case it may keep rising towards this monthly 100% extension on a Fibonacci possibly happen. So again, we'll keep an eye on it, and I'll let you know how it goes with one step at a time. Now the NASDAQ's got similar sort of pattern emerging. So you can see here on the monthly, still a bearish divergence versus high highs on the price, and we drew our target level there. Again, that could still possibly rise. On the weekly, another bearish divergence there versus slightly higher highs on the price. So that's a bearish divergence nonetheless. And on the daily, bearish divergence versus high highs on the price, or actually almost equal double top on the price. And that's our initial target range. So we expect it to pull back from there. Should it start pulling back from where it is at the moment, it's currently kissing that resistance at 28.22, and it may well pull back at any time. Going to the intraday chart, again using the daily as a reference, only going long, you'll notice the 1 hour, we've got a bearish divergence between lower highs there versus higher highs on the price. And I've already drawn a target range there, so we may start seeing it pull back on the CCI, but also the price as well. Again, one step at a time. We don't go short until we see the daily break to the downside. At the moment, should this break higher and break through that resistance, as soon as it breaks above that CCI, we'd enter another long position and just follow it on the daily. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.